Hi everyone, I'm Ken from Crypto Trading KS. If you're new, welcome, and welcome back to our regular community. Twice a day, 7 days a week, I share my experience as a full-time crypto trader. My goal is to assist you to become more of a financial blessing to yourself and those you love. Everything I do for you is free. This is a special series on the KS model. The KS model is a Bitcoin technical trading model based on institutional price psychology. I wrote an article on Medium, KS model predicting Bitcoin at 486,000 by May 25th, 2020. I explain what the difference is between institutional and retail psychology there. I think that's a really good place to go if you'd like to learn more about it. Specifically, what we're trying to accomplish today is to show how this blue cycle and this green cycle impact this current white cycle. Let me explain. In 2012, we had what's called a halving. The halving created a blue sun here, so this is why this price action is in blue. Every halving cycle has 3 seasons: a bull market, a bear market, and consolidation. A bull market is where prices go up and there's positive optimism and positive psychology inside the market for both institutions and retail. When we enter a bear market, it occurs when the rocket hits the moon. That means the rocket of price has come to an unsustainable point in its trajectory. When it hits the moon says, okay, fantastic rocket, mission accomplished, go back to Earth, rebuild yourself so you can go for the next moon in the next cycle. And that's what happens. A bear market, prices are falling, and they can fall dramatically until a point where we see what's called capitulation. Capitulation is another term for surrender. When prices capitulate, we hammer in the low of the bear market cycle. Then the rocket is rebuilt, the next halving occurs, and from the halving date forward, it's psychological sunshine, followed by psychological darkness, followed by psychological dawn, until the next halving, where the cycle continues and continues. To separate the cycles, I've done what's called sun work. So we create a blue sun for the 2012 halving, and it's the whole cycle from 2012 onwards until it finishes. In the 2016 cycle, we call that the green sun, and that is composed of the 3 seasons: bull market, bear market, consolidation. So that is the green sun. In the current market, that's called the white sun. I'll explain more about these things. The important part to note is the blue sun has a blue price trajectory here that you can see. The green sun has a green price trajectory that you can see here. Now what I'm going to do is I'm going to shift these, I'm going to move these across to the current bull market in the white sun perspective, but I'm going to take it step by step and explain what's happening. The first thing we're going to do is take the blue sun cycle price and move it across to the green sun's price trajectory. I'd like to quickly zoom in to the 2012 halving cycle. We can see that the halving started on the 28th of November 2012. The peak was reached on the 30th of November 2012. The difference in between there, 28th of November to the 30th of November, is 367 days. This becomes interesting because when you represent this chart on 3-day and 2-day time frames, that number can change around, but just keep in mind that's 367 days. This chart is created in TradingView, which I'll share with the community. It's just a bug in TradingView. It doesn't represent the right date number and can be misleading if you directly read off the chart. Let's now move from the 2012 halving cycle to the 2016 halving cycle. The 2016 halving cycle started on the 9th of July 2016. So if we just pop on there, you see 9th of July 2016 there. In that period, 12.5 new Bitcoin were created every 10 minutes. It's become a well-known anomaly that the halving cycle is every 4 years, but the actual period between the 2012 halving and the 2016 halving was 1,319 days, or approximately 1.899 million minutes. For a block height of 210,000 blocks, one block was produced every 9.04 minutes, which meant the halving cycle was 3 years, 7 months, and 1 week. That's just a technical thing for the people that are really interested. This halving cycle started, as we mentioned, on the 9th of July 2016. The bull market peak was reached on the 17th of December 2017. I'll just show you quickly the time difference in TradingView from the 9th of July 2016 to the 17th of December 2017 is 526 days. As a full-time crypto trader, I'm really interested in technical analysis and price action. What I noticed here was a fascinating thing through the chaos model. When we compare the 2012 cycle, bull market cycle, to the 2016 bull market cycle, we can see it's very different. It's actually around 43% longer. Many people in the 2016 cycle believed the bull market would finish when this fractal ran out, which was approximately the 15th of July 2017. Notice what happened to price. It was bid up and then bid down, and that blue moon from the 2012 cycle was nearly at the bottom of that particular cycle. Not quite, but close. What's really interesting is look at this sell-off that occurred here. Just as everybody thought that that cycle was over from the 2012 cycle, and they thought it would absolutely overlay on 2016, they sold off, and sold off hard, quite hard. It's a very fascinating thing. I'd like to discuss a statistical term with you. For many years, I lectured first and second year stats. One thing that we tend to talk about is the difference between normalization and standardization. Normalization you can look at as a rescaling. That's what we're going to do here. I'm going to show you something that I've not seen anywhere else. If we normalize this price fractal, it's going to be really interesting to see what happens. What we actually do is we're expanding it. What we're doing is expanding this fractal to reflect the price action in 2016. Now, I'm doing that for a very, very specific reason that I'll show you a little bit later. But you can see how price action went exponential. Pretty much, there's a lot of similarities between these particular curves. There was a very initial blow-off in the 2012. This was quite a reduction in price. This goes to show you that these fractals are quite interesting when overlaid with each other. Let's go to the next area. Let's quickly discuss the 2020 halving. I call this the white sun. So we've got a blue sun, 2012, we have a green sun, 2016, and we have a white sun, 2020. I find that these sort of colored dots really help people to understand very, very simply. The 2020 halving began on the 11th of May 2020. What's really interesting is the difference between the halving date of the 9th of July 2016 and the 11th of May 2020 was 1,402 days, or approximately 2.019 million minutes. 210,000 block height is actually how the halving is created. That means that this cycle actually created one block every 9.6 minutes. That means that there was an extra 83 days in this particular cycle, which made the cycle longer at 3 years, 10 months. I'll just move this back a little bit so it's easier to see. 3 years, 10 months, where the 2016 was 3 years, 7 months, 1 week. You see, the halving periods are actually getting longer. I haven't seen too much on this out there. It's really interesting to share. Just before we move these two fractals over, the 2012 cycle and the 2016 cycle, I've just taken that 367 days and I wanted to show you something incredibly interesting. This is what I call the 367 day dump. On the 11th of May, the halving occurred. We had a huge dump at the blue sun, which saw a very rapid sell-off. The interesting thing, the 367 days, is the time between the 11th of May and the 13th of May when the sell-off began. Eerily accurate. We just saw the blue sun at 367 days causing a price memory attack. What could possibly happen at the green sun, the 2016 sun, this one? We know that that's 526 days, so all I've done is just bring it across to here. Let's check if our dates are correct. We've got the 11th of May here, so we check it. 11th of May is correct. We have this date here, the 19th of October. So the 19th of October to the 11th of May, that is indeed 526 days. We're putting the green sun there. Now, what does this mean? I've estimated from a statistical probability that people will think this current bull market in 2020 will end around the 19th of October. And because we saw a 42% increase, remember how I stretched this blue sun out, that's about 43%, I believe we're going to have the same thing in the 2020 cycle. That means I believe we're going to have to take that green sun and pull it out at least 43%. But just like we saw in the 2016 area, I don't think people are going to see it until after it happens. So let's check out what happens when we move these two fractals across to the 2020 period. What I've done is I've just moved the blue sun fractal and the green sun fractal across exactly as they are. We can see something really, really interesting. You see the green sun, which comes from the 2016 halving. You see how it's basically peaking around the $235,000 mark. It's a really fascinating concept. The blue sun is way up over into the 800,000 as a peak. What I've basically said to people, I believe that we'll come in around this particular figure, around 170 odd thousand for this cycle. But this is not over. Just like it wasn't over when we hit the blue sun here in the 2016 halving, it went for 43% more time. I believe that we will witness another 43% increase to take us to 486,000. I hope that's helped people understand a little bit about how we can view the current sort of 19th of October number. A lot of community members have asked me questions about what kind of price targets we would feel are reasonable. I believe anything in this range is reasonable. That's why I've actually shaded it yellow, because it gives us a range of potential probabilities that we can work with. In part 3 of the series, I'll explain why $100,000 cannot mathematically be the top of the bull cycle for 2020. It comes from some very hardcore logic and it makes sense probabilistically. And literally all trading and investing is related to probability. I quickly like to explain a little bit about this circle, because some people will say, hang on a sec, Ken, this dips down to like 71,000, what's going on here? It's really important to understand bull market action. We've seen the price rally up and reduce around 50%. I would expect the price to rally up and then decrease in order to rally again. These prices that I'm putting here are done for a reason. I hope that assists. It's helpful to note that some market commentators have talked about 150,000 to 200,000 to 300,000 by the end of the year. I have fully subscribed to that. The important thing to understand, when you are in an exponential market, prices can spike up and fulfill those targets. I think that's what people tend to overlook or maybe not understand. You only have to spike up to hit a target, and you can spike down to fulfill that target up there. I would recommend that you look at part 1 of this series, because it talks about exponential growth. Exponential growth means that it can shoot up and shoot down rather quickly. The tops are always characterized by swings, midterm tops, I mean, not the actual top of the market. Just a note on that, just to help you to gain some perspective as to what is coming. In later sessions, I'll talk about the peak, but it's a little bit early for now. For those new to crypto, I'd just like to explain, when price moves in waves, as it always does, it's always up and down and up and down. These swings are very, very volatile. You can see Bitcoin basically tanking 20%, 30% in one day. It's possible, as we witnessed here. When there are black swan events, we can notice very sharp sell-offs in the market. They're not to be confused with structural damage. Bitcoin is not structurally damaged by black swans. As we saw back in the US liquidity crisis on the 12th of March, when we had this massive sell-off, we had, for example, back here, the US-China trade war in December 2018, it was not damaged. We've had numerous black swans that impinge. August 16, Russia and Saudi Arabia capped the oil, and there was a huge oil problem. Even down here in October 2013, the US-North Korea conflict and the US government shutdown, that spike down lasted literally 1 week. It's very helpful to know that if we face any black swans during this period, that's actually a time where the institutions will be. I think a lot of retail traders could get very much stopped out of the market at that stage. I would argue that if you look at the price action of Bitcoin, every time things sell down dramatically, it's absolutely the right place to buy. But of course, you have to know what you're doing, what stage you're in. And I would recommend that you keep up with our twice daily updates, because they can provide a lot of guidance for you, and they may be helpful. I do these videos to assist you to be more of a financial blessing to yourself and those you love. I hope you found the content useful. Please say hi and let me know where you're viewing from, and if you have any questions. Our community is very helpful and supportive, and I always do my best to respond. If you would like twice daily updates 7 days a week on price movements in the crypto market, please subscribe to YouTube and follow me on Twitter. Everything I do is free. Crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there. Take care, and see you next time. Bye for now.